submit our results for Silk. So Silk Port Logistics and Silk Contract Logistics.
Yep.
Along with those, we need to submit a CEO report. So this CEO report, there is no submission per se. It is purely the Excel file.
Yep.
And you would roll the same Excel file forward. So Aaron will show you guys how to do this. And then along with this pack, you will also submit a flash report, which Kelly's going to send through now, which I can go through quickly as well. It's very easy. But essentially on the 4th working day, you would submit 3 things, which would be the P&L result, your CEO report, and the DP World Flash. The DP World Flash is submitted through SmartView, but you can still send it through just as confirmation that it's completed.
Yeah.
Yeah. All right. So do you want to show Aaron the CEO report and what to update, what to exclude from the number?
Yes, I can take it through that. So is it already recording?
Yes.
Okay. So the CEO report is a report that is managed by APAC, so Singapore team, where they use it to consolidate all the results from the whole APAC region. As you can see on the screen there, you can see port logistics, contract logistics, and there are other tabs that are hidden because it's not relevant to Silk. So for example, we in Australia, we have the container parks tab, ports tab, landside tab. There's a lot of different tabs. So CEO report, as Nick said, on day 4, we need to submit our results. So you can only do the CEO report after you locked in your results and you know what you're going to be reporting to the buyer. The pack is very simple. So I guess it's lagging, but October. So I'm just going to do an October one with you. So year, you usually don't have to change it for 12 months, right? Months, it's a drop-down box. So I will change this to October when I'll be doing October. Country, because we're based in Australia, but for other, these are the countries that it gets circulated to. And then local currency AUD. In here, you don't really have to touch anything else after that. So we'll come back to this tab later, but so the tabs are divided into input tabs, which is highlighted in pink, yellow tabs, which reports the actuals, the light blue tab, which is the forecast, and green tab is the budget. So for the budget, we only do it once. Whatever we budgeted for the 12 months, we input this into the CEO report template, and we don't have to update it for 12 months. Forecast, we do have to update it every time we do a reforecast. So we do 3 reforecasts, RF reforecast 1, 2, and 3. So every time there's a reforecast, we do have to update this section. This section is usually control locked, like this. In the relevant months, the APAC team will unlock that for you to update it. It is very important that you reconcile the numbers in here to your EPBCS or your accounting.
Wouldn't be EPBCS. It would just be your what do you reconcile? What do you guys reconcile back to all the time? So, like for example, for us, it's the FCCS report, which is our consolidation tool, which is based on Oracle's global chart of accounts.
Yep.
Which means that it picks up the global chart of account regardless of if we've allocated something wrong or mismatched something.
Yep.
It will pick up everything for us. So that is our gospel. Yep. That's what the file that we reconcile back to. So for you guys, it might be.
I think it runs the reforecasting Board International.
Yeah.
And upload it into GP, so that will reconcile back to my.
More focusing on actuals, but so actuals have to reconcile to whatever you guys are submitting and your trial balances.
Yes. So
the
the actual, we have one single source of truth.
Yeah. So if you have a single source of truth, that's what you reconcile back to.
So
and it needs to match like perfectly. So the only anyway, I'm going to explain to you.
So the actuals, forecast, and budget tabs are actual controller. It's all formula driven. I believe it should be the budget tab isn't, but let me just show you the forecast tab and the actual tabs. These should all be control locked. all we need to do is really focus on the input tabs. So depending on the month that we selected in the input, can you see it highlights as yellow? So that is the sections that you need to update for it to get consolidated into here, and it will get, if it's an actual month, it will get carried to the actual months tab. If it's a forecast, anything that's not an actual will be carried forward to the forecast tab. Any questions so far? Or pretty straightforward?
So far, so good.
Yeah.
Just quickly, who's going to update the budget 2026 in here? Is it going to be RB or is it going to be your team?
Good question.
Because the budget you update once for the year, and that's it. The reforecast you update, like Aaron said, every quarter for the rest of the year.
Yeah.
So for in March, you'll update with March actuals plus April to December forecast, and the same for June, same for September.
Later for Abby,
Yes.
to show the integrity of the number. So he got a book, it translated into here.
Okay.
Not Arnold.
No.
Should we get RB in this room so that he knows what numbers to include and how to update it as well? By the way, I do recommend there's one owner of this file.
Yeah.
If there's multiple owners, you have to be very careful
Yeah.
that you get this right, because this goes to Glenn Hilton,
Yeah.
who's the CEO of APAC. This is his source of truth for how the business is tracking.
Yeah.
So if we get this wrong, we will know about it loudly,
Yeah.
very loudly. He's not a shy guy, Glenn Hilton.
It's just a few lines in the P&L, right?
Yeah.
And then
It is.
I suggest that, from Abby's side, once he knows whether the budget or the free forecast is locked in, approved from the board, from Dubai, he will need to translate into this format, and whether update that or send it to you to update, not going to take more than 5 minutes anyway.
Or does he look after the actuals as well, or who?
No.
No.
So RB looks after budgets and
Yeah,
forecasts,
yeah.
FP&A.
So the actual will be done by your team?
Yes.
Yeah.
He is the man.
He's the man.
RB, have you met Aaron?
A lot of times.
A couple of times.
Way too many times.
It's finished though.
Take a seat wherever you like.
So we're going for the CEO report, which involves entering data for the budget,
Oh, okay.
forecast, everything that we.
Right. I'm gonna be here then.
Yeah, so it's a good idea to know what should be included, what shouldn't be included, and how to update this, because once the numbers are locked in, which will probably be sometime next month, I reckon. I think there's supposed to be changes, but I don't know if there isn't. But there's nothing stopping you from getting a copy of this file and doing this now, to be honest, and entering in all this data for the budget.
Is that already there or?
No.
like-
This file is not linked to, this file has nothing to do with the device emission or SmartView.
Yeah.
It is an Excel consolidation tool for APAC, for Glenn Hilton.
Okay.
This is how Glenn, so what happens is Fiona and Kelly,
Bonson.
they send this file, and Bonson, they send this file out to all the clusters,
Yeah.
which are all the regions, right? So Oceania, Southeast Asia, North Asia, and I don't know what Korea is. What's Korea? Korea is Korea.
Korea.
So they send one out to all of them, and then Aaron helps us do the one for Australia. We have this pack, but it's got all of our business units. Silk is only separated out for now because you guys we don't know your business.
Yep.
And so what we need to do is, if you can go to the budget tab, so you got to do this once per year, and you're going to update essentially the budget for the full year. So this is going to be in the exact same template for 2026, but you just need to input the data there. So when it does come through in November, you can just copy and paste it across.
No. Oh, so because it's not finalized as yet, so that's why.
They haven't asked for it yet, but they
But they will.
They are 100% they will ask for it this year.
Okay.
So that means once you finalize your budget or reforecast, you got the approval, final number locked in, you will need to translate, your book into this format.
Mhm.
Broken down by the port logistics and contract logistics, right?
We have all the data as
Yeah.
already.
And
It's just a matter of chopping and changing it.
Yeah. And whether you send it to me or you populate directly into here, that's fine. But I don't think that's gonna be a big task before it's just revenue, cost profits, overhead, operating margins.
It's
Yeah,
called post.
Or post.
All post.
Every report that you send out to Dubai,
Yeah.
every reporting
Yeah.
is post.
yeah.
Always post,
The
unless specified otherwise.
yeah, the
If
clean,
it's specified otherwise, then it's pre.
Mm.
But we report a pre number to Peter,
yeah,
and Dubai will also. There's another something else that they would want to. They calculate ROCE based on a pre calculation as well, which is very important to them. But it won't impact anything that you guys would do today.
Yeah.
That you'll be showing today. Everything for you is post.
all right. But that have to agree with your final version or final version.
Yeah.
Whatever thing you have uploaded, you know what you have uploaded.
If it doesn't agree, you will get a phone call.
Yeah,
Not from me. But yeah, that's
Yeah.
one of them. So
Yeah.
budget you have to do, and then there's a forecast every quarter.
yeah.
So the forecast,
Sorry, this is what report is it?
CEO.
CEO report.
But this is like a monthly thing, even though
Yes.
budget is locked in.
So budget, again, this the budget, you have to do it once a year.
Once a
Once the
year,
budget's
and
a
then-
submission,
Ah,
and then the reforecast,
Mhm.
you'll need to do every quarter. So
Yeah.
March month end,
Yeah.
June month end, September month end.
Mhm.
And then the actuals, I think you're going to submit or you and your team are going to submit the actuals on a monthly basis.
Correct.
Yeah. That's it. The only thing, everything just has to reconcile back to what we submitted. That's it.
Yeah. As you probably can see here, you'll probably be questioning why is there the same table twice, one in dark blue and gray? That's because as the business expands, they start adding the green. Each green table here represents one entity. So it'll just keep going down. So in Australia, in one tab, we have 4 or 5 or 6 different entities. That's why the blue one consolidates everything. In your case, everything, your blue should equal to your submission.
Okay.
And as Nick mentioned, the way they will check this number is based on the number that you guys report in your planning 44. So once that gets uploaded, the owner, Kelly and Bonson will do a reconciliation. If there's a variance, we're gonna call. And it won't be a nice call.
They're nice.
They're nice. Once it goes past that, it won't be a nice call.
No, they're nice.
No, but they are nice. Okay, so then all your team needs to do is update the actuals.
Yep.
So this part is only yellow because I actually selected October. So because I selected October, actuals will go up to October. The reforecast will stay from November and December. If I change this to September, the actuals would only go to up to September.
Okay.
Yeah. So there are a few items that need to be excluded from your results manually from this report. Number one, redundancies. Redundancy payouts are not included into this result. So if there was a redundancy payment, we take it out of our result. So we take that expense out of our
Result complete.
result completely.
Not with the budget,
You don't have
You
redundancy.
couldn't, you can't budget.
You don't budget for redundancy.
if they're, I'm just
should-
asking. I'm asking a question.
So I know what you're referring to. There isn't okay, put it this way, separately disclosed items are not to be reported in this.
In September, the abnormal cost being backed out from.
Correct.
Yeah.
What
So if we
about
put the redundancy into the
44?
abnormal, it will be backed out. Together.
It will only be, so in this pack,
This
it would
pack
only
is
be
good.
reported. So it might be another line that you'll have to add in here to your result and your final P&L, which would be excluding redundancy. So EBITDA, And it's not on an EBITDA level anyway, so it'll probably be profit. Might be actually
Below.
below. So you'll have the PAT excluding redundancy, PAT including redundancy.
No. If you have redundancy in your
It can be.
operational cost,
Yeah.
that will impact to your
Yeah.
gross profit,
Yeah.
right?
Depending
Unless you
on-
treat that as abnormal.
Yeah,
It depends on where you put your redundancy costs in your P&L, but then.
Yeah.
I thought isn't it abnormal?
That's
depending.
Depending.
Depending. If it's a normal course of business, it will be up top,
Yeah,
included a normal impact. But if it's like a
Restructure or something.
restructure, like
Yeah.
Brendan Prenton, James Nicholas, those type of redundancy will be abnormal.
So redundancy costs full stop for DP World are excluded from your result, regardless if they are operational or a structural or just general business use. They are excluded from
yeah.
our result at all levels.
But then how can you reconcile that with your income tax expense? You have to make it as an abnormal rules, right?
Yeah,
So now you have to also take out the income tax component,
yes.
tax component for that as well. As in like, we take 33%, right?
Yeah,
And you guys said,
It's a-
will you guys
a
take
assumption,
33% as well?
it's not assumption. You would assume an amount sorry, it is an assumption, but the assumption will be based off like we use 33%, which is our effective tax rate as a group.
Yeah,
I'm guessing you guys use 28, 30% or something like that as your
We
effective
use
rate every month.
32% for.
There you go.
Yeah.
So if you use 32%, then and your redundancy was 100 grand,
yeah.
for example, then you have to whatever the 32% is.
For your
back.
PAT, you would probably make that tax adjustment as well.
Okay,
I think the way to code redundancy moving forward is to code it to abnormal straight away.
Yeah,
Because when I
absolutely.
do my
Yeah.
tax provisioning, it's always backing out the abnormal.
Yes.
Because abnormal, it's either
Mm,
tax non-deductible
no.
or black hole.
Yeah.
So it's not
You
part of my tax
can't do
provision.
that because your abnormal go below EBITDA or EBIT, right?
Yes.
Then
Yeah,
that
like-
can impact into your gross profit. I mean, the operational P&L. If
Yeah, but
that-
if you're not supposed to include it in the cost, then it shouldn't be included at any level.
Because from the reporting DP role needs, it's not part of the running cost anyway.
would that impact into your analysis cost? That's my question, right?
It might be impacting in a way that they are expecting a higher cost for employment
Yeah,
in the business, but it comes out lower.
so that you gotta consider that you back out your redundancy from the gross profit and put it down, below EBIT, right? So that
Yeah,
means
yeah.
your gross profit increase.
Yeah.
And that just inflate your performance.
Yeah, but redundancy is not a normal business expense. It's an extraordinary expense. It'll always be an extraordinary
Yeah,
expense. So you can't include it as part of your gross margin because it's not part of your operations. If it was part of your operations, like overtime, labor cost, or you had to add 10 people to complete a job, then fair enough. But because redundancy isn't part of your normal business operations, it shouldn't be included in your gross margin anyway. Your gross margin will be understated.
Yeah.
Most of the redundancy we've done, it's related to restructure.
Yeah.
Normally, if which is the termination of employment, it would be just a normal course. There's no such a
Yeah,
thing.
termination of employment, that's purely annual leave,
Mm.
and if whatever,
Those-
4 weeks in
going-
lieu, all that sort of stuff is fine.
Yeah.
We're only, it's just the redundancy portion.
Yep.
Where it's considered to be extraordinary item, which it should be considered. Correct, because that's not part of that shouldn't be an expense. So from the buyer's perspective, right?
Yeah.
How can they, if you have a budget of $1 million you have to hit, but then you restructured your business in order to hit that target of $1 million.
Yeah.
But that restructure costs you 400,000 in redundancy cost. How is that fair for them to buy to be like, well, that's an expense for the business.
Yep.
Like we're going to add that in. So you only made 600,000. You didn't make $1 million. They have to exclude that redundancy for it to be fair because it's not a normal
Yeah, you
business
have to
operation.
normalize that. Yeah,
You normalize it and then you pull it back and then it goes.
that's
Yeah,
okay.
That's fine.
You can journal that, or because we always have the redundancy account anyway.
We do have, but if it is restructure nature, we put that one back to a abnormal.
You can, so whether or not you keep it in redundancy or not, you can just have
Okay.
a separate calculation
Yeah.
underneath your current P&L
Yeah,
that you literally recalculate your EBITDA, EBIT,
yeah,
PBT, PAT as well, based on excluding redundancies. So,
No, cool.
Yeah.
that's it.
Yeah.
You just back it out manually, and at least you have backup of what your year-to-date number is, month-to-date,
Yeah.
and year-to-date excluding EBITDA is from the P&L perspective.
Yep.
And then you can refer to that instead of reallocating or knowing where to allocate something.
Yeah.
Just recalculate at the bottom every month.
yeah,
That's what our freight forwarding business
okay,
does.
yeah,
I would suggest just to account it abnormal.
Abnormal everything.
Yeah.
For FX.
so,
Another thing to exclude from the results, unrealized effects.
We don't have it.
You don't have any?
Oh,
Only local Australians.
that's it.
everyone at the same time said, we don't have, so happy.
Something happy.
Do we have New Zealand business?
We request
It's
them
called
to
AUD, right?
do business with us in AUD, right?
Yeah, okay, that actually makes life so much easier.
So just redundancy and FX. Do
Effects.
you have any FX in future?
Uh,
Whether that be, you might have some in terms of depending on how the CapEx goes, capital projects go.
yeah.
Yeah.
we saw
I don't think that's going to happen. You're going to go through, for the big projects, you'll have global. Global gets involved and they do procurement on a global level.
Yeah.
So they source it from, because you might be looking for, let's say, automation in a warehouse.
Yeah.
Thailand might be looking for the same thing. Germany might be looking for the same thing.
Yeah.
So instead of one site doing it, they go as a bunch and say, we're going to buy, instead of 30 automated machines, we're going to buy 300.
Yeah.
And then you're going to get a better rate. So
Yeah, that's fair enough. And
that's the buying, that's the pull power that DP board has, is that they can buy in bulk.
I'll
Globally.
also why that DP will purchase for us and will purchase from DP will. Not that we can transact in AUD.
But anyway, if you guys don't have it, awesome.
Amazing.
Sorry, back to your point.
Yes,
The CEO report had to agree with the planning 44.
yeah, of course,
So
yeah.
that means the planning 44 have to back out redundancy and
No, because there will be a variance.
The
Okay.
variance is the
the
back.
variance is a backup.
Explainable variance is good. Like the Fiona will ask, sponsor will ask, someone will ask, why is there a variance in your account?
Yeah.
And then what I do is I tell them, this month there was redundancy in this entity causing this much variance. And then they won't ask that.
They have an explanation.
If you have an explanation of why this amount wasn't included, and that's why there is a variance between your EPBCS and your thing, or I mean planning 44, then they are happy with it.
Okay, yeah.
So there will be a variance at times when stuff like that happens.
Yep.
Let's keep going. We're going to run it.
That's I know
The
that was the easiest one.
So you got to do it for contract, for port logistics and
contract logistics. You have to split them up.
Yep.
TEU, I think, as Nick said,
I don't know what we're going to do to you. Just
So
let's
now.
yeah.
In
I
your
think-
budget and reforecast,
Don't have any TU,
you
unfortunately.
probably need to work out the TEU as well.
I think we requested for that input last month end, but the business suggests that they run out of time to get the data, or if they can get it, they'll look into it if they can.
Yeah.
But I don't think it's an easy exercise.
To get
because
volume.
the volume is coming in differently.
Okay.
It's a different matrix altogether and like even for the
Can we
budget.
estimate, like, even if it's just like,
And you can estimate.
It will be hard because the mix of the container.
so you mean 2044?
Yes, yeah. it will
So
be-
can we just, whatever our budget assumption was, can we just use, if we put an assumption on budget?
We budget by.
But there is not
Of
the EU.
containers, yeah.
I know, but if we have number built like containers.
We had a total build containers, that's what
Okay.
we have.
If we assume hypothetically 1.5 TEU per build container,
That's assuming the ratio.
let's just say hypothetically, we use 1.5.
Yeah.
And we use that for all of our actuals moving forward as well. It should be aligned.
Yeah.
No?
That's much easier
Yeah.
to explain because, you
Yeah.
know,
Because they will ask for TU numbers and volume.
so in that way you compare apple to apple.
As long as you make it.
Yeah, you have to, you know, compare that ratio.
If you're gonna do it, I think in your numbers, try and work out what the mix is now